Welcome back, investors, to Ticker Time News. I'm Adam, and shares of Advanced Micro Devices, ticker symbol AMD, are advancing higher after the company reported a beat and raise result at the midpoint in its Q1 earnings results. The quarter provided a view of how the company's business has fared since AMD closed an acquisition of Xilinx in mid-February and later began to operate on the combined basis with Xilinx. The headline numbers featured upside for both EPS and revenue, along with strong revenue guidance for both Q2 and for fiscal year 22. So, it's a fair question to ask. How much of that upside comes from the addition of Xilinx? Well, management actually clarified that and said that the rise in its growth is AMD growth only, and the growth outlook is going from 31% to a mid-30s percentage point, primarily driven by strong demand in its server business and its console segment. Overall, Q1 showed broad-based strength, especially in servers, where AMD believes it can continue to gain market share as it brings more supply online. Other bright spots were its game console business, as well as the client and graphics businesses. Investors have been rightly concerned about a slowdown in the PC market. Intel really showed this slowing down. The pandemic stuck buying activity for home office equipment, including new computers. But as the pandemic has now entered into its third year, questions surrounding the sustainability of that activity have come into focus. AMD conceded that it is seeing a slowdown in PCs, but it countered that it's been seeing a shift towards a mix of more premium segments of the PC market, including commercial and gaming. Those segments have held up much better. The process of integrating Xilinx is still in the early phase, but is progressing well. AMD reminded investors that Xilinx, as the industry's largest provider of FPGA and adaptive computer chips, significantly expands AMD's portfolio and adds multiple high-margin, long-term revenue streams spanning a new set of markets and customers. And just as a quick housekeeping matter, AMD will change its segment reporting in Q2. This decision presumably represents the addition of Xilinx. The new segments will be data center, client, gaming, and embedded, which will align with its financial reporting with its strategic end markets. I do applaud this decision, as its current two-segment format can be a bit confusing at times. Overall, investors seem pleased with AMD's first quarter that included Xilinx. The quarter's highlight was robust sales at its server segment, where it's gaining a lot of market share. The PC slowdown is a concern, but I think anxiety around it is a bit overblown, and it has been weighing on the share price a bit too much. AMD's exposure has been shifting towards the higher end of the spectrum, which has held up much better. Finally, the stock is down 40+% from its November highs, driven by a rotation out of tech, rising interest rates, supply chain concerns, and a weakening PC market. The sell-off seems to be a bit overdone, and I think the stock is worth a closer look. Actually, I believe AMD is flirting with a buy zone right now. AMD sub 100 is attractive. And my buy zone for AMD is between $78 to $98 a share, and it's about to exit that zone in the coming days. Oh, let me know. What do you think about AMD's earnings, and where's your buy zone for AMD? Let me know in the comments below, as your comments help us all to better understand. Help us out by smashing that like button, sharing this video, and join us in beating this crazy market by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.